So on the third day, the market bounced. Just when it looked like stocks were going to extend the steep declines of the past two sessions, sentiment suddenly reversed and selling turned into buying. Tech stocks led the way higher today, followed by energy. But the day did start with more angst after a report on the services sector of the economy showed weakness. That led to concerns that the economic slowdown could end up being broader than initially thought. But it also raised expectations that the Federal Reserve will cut interest rates a third time when central bankers meet later this month. And that apparently is what brought the buyers back into the market. The Dow Industrials closed up 122 points. We're back above 26,000. The NASDAQ was up 87 and the S&P added 23. Mike Santoli reports from the New York Stock Exchange tonight.
Investors are in the grip of another recession scare, but the markets have been reflecting slowdown fears for months. So the crucial question now, just what degree of economic deceleration is already priced into stocks? The broad S&P 500 is a mere 4% below its record high from late July. In even a mild recession, stocks tend to fall at least 20%, which suggests equities would not easily shrug off an outright drop in economic activity from current levels. Yet the S&P is also flat for the past year, and the sectors most tightly tied to the economic cycle have lagged badly and are valued at significant discounts to the big, reliable growth stocks that have carried the indexes. In fact, banks, retailers, transportation companies, and energy producers are all now valued near their cheapest levels of the past decade. This suggests the pain has already been felt in the most economically sensitive parts of the market. Now, whether they are cheap enough comes down to one question. Is the U.S. undergoing a temporary lull in economic growth due to trade frictions and the tax cuts receding into the past, allowing for a soft landing helped by Federal Reserve rate cuts? Or will poor global growth drag a mature domestic economic cycle into recession despite lower interest rates? It is hard to have certainty about the answer, which is why every fresh bit of economic evidence creates a high-stakes moment for an anxious Wall Street. That very much includes tomorrow's jobs report for September. For a Nightly Business Report, I'm Mike Santoli.